Okay, I'll just take a couple of minutes on this because people were asking about it, I guess. Student debt threatens to be the next debt tsunami. It could trigger another credit crisis like the crisis of 2008. It's now over $1 trillion, which is larger even than credit card debt. We could actually dispose of that debt totally, and it would actually stimulate the economy. That's what I would argue. The Federal Reserve, when they did their quantitative easing one, just created on their books $1.2 trillion and bought up mortgage-backed securities from banks. So it was an asset swap. They traded mortgage-backed securities for dollars, basically. And they could do the same thing with the student debt. They're talking about another quantitative easing. They're talking about asset-backed securities, which is what student debt is. They bundle up this debt and they sell it off to investors, just like they do with mortgages. So the Fed could, in the same way, buy up $1 trillion in student debt, and if it wished, it could just rip them up. Or they could, they probably wouldn't do it that way. They might maybe forgive the tuition and maybe make some sort of fair workout on the rest of it. But there are various ways that we could get rid of a lot of this debt overhang. But people say, well, that would be inflationary. I would argue that it wouldn't. First of all, the money supply has shrunk by $3 trillion since 2008, according to the Fed's own records. The shrinkage was in M3, the part that they don't report anymore, the shadow banking system. But that's $3 trillion less that we have in the economy, creating demand for goods and services, and so the economy has shrunk. So if you added back $1 trillion, let's say you put $1 trillion in the pockets of students, that the QE1 did not have much effect on the economy because the money went onto the books of banks, and banks do not shop. They do not buy homes, they do not buy cars, they do not buy but students do shop. So if you want to stimulate demand, you have to get the money directly into the pockets of the people who will be out there shopping. And there's no class that shop more than students. These are the people that need the new homes, that like the cars, that like the electronics, that frequent the malls. So there are other ways that you could get rid of debt overhang. You might make out some work out with mortgage holders, et cetera, but that's one easy way to do it. Another thing would be for the Treasury itself could issue $1 trillion coin. The Constitution says Congress shall have the power to coin money and regulate the value thereof. It doesn't say this. It doesn't put a limit on the size of the coins, so they could issue, or maybe 10 $100 billion coins, if that sounds better. Something you can make chains for. Anyway, you say, so you put it in a bank account and just start writing checks on it. And the only argument against that would be that it's inflationary, but it wouldn't be because we have a shrinkage in the money supply. We need to get money back in the money supply just to create the demand to buy our own products. Labor does not, there are not enough salaries and wages to pay for the goods and services that our own workers create. Thank you.